Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Wednesday, the 4th of February, 2026, just getting on towards 6:20 p.m. Central Time. I'm still nursing this terrible cold that ended up after the flu that I caught. If you get it, you get that lingering cough and a cold. It's better than the flu, and the flu wasn't for me that terrible. I did get the shots, and I do believe in the vaccines. They mitigate whatever you're going to get. They don't stop you from getting it. They just help you along the way, and that's what vaccines are about in many cases. So the events of the world are interesting. You know, the financial arena is crazy right now. We're seeing tech stocks get beaten up rather hard. They're coming out with great numbers. AMD was an example today. I thought the numbers looked great. Bang, right through the toilet. The market goes double-digit loss. Because good isn't good enough. And because people expect that all this CapEx that's being spent, these phenomenal numbers, there's not going to be a payback on them. We'll see if that's right or wrong. You know, this week we had Anthropic come out with a new link, if you will. I want to call it that. It's on the website, a plug-in, whatever you want to call it. And people think that's the end of software. Nonsense. It's not the end of software. Jason Wang was on today saying that much so. But people think that AI is all-encompassing and can do everything. That is not the way it is. But it does change things. It does change maybe, is the software robust enough? Do you need as many seats for that piece of software? For those of you that run companies, you know what I'm saying. It's not just you, but there's 20 of you in that company. You have to have 20 seats to use that license. So you have to get them, and maybe you don't need as many. That's what's hurting parts of that. None of this is changing the need for faster semiconductors or memory. I can go on and on. That's what's going on. The other event to the world is the U.S. and Iran. There's a showdown. We didn't put the naval force that we have there and other instruments there. The president says we've got our Iron Dome set up for ourselves and for our allies. There's probably more vessels there than we're hearing about. You don't say everything, and this president gets that game. He's not like other presidents that told you what they were going to do. He keeps you off base. Iran is trying to do the same. Iran is trying to show they too have control. We're not going to meet in Turkey. You have to meet with us in Oman. And no, it's not going to be your agenda. It's going to be our agenda. We'll see. Okay? If you don't get the two sides to meet, what's the next step? If you get the two sides to meet, can they reach agreement? I think that Iran has set its line in the sand. They're not going to allow the U.S. to tell them what they can do with missiles. They'll keep saying Israel's an aggressor. They'll say whatever they want to say. They're going to say that if they want to give money to parties they believe in the Middle East, the U.S. can't tell them what they can and can't do with their funds. They're a sovereign nation. I think those two are the red line. I'm not convinced that the red line is nuclear. I think that their own neighbors want them to do away with it. We don't need another nuclear power. We don't need a wild cannon out in any spot of the world. It's rough enough to have North Korea. What do you do with all the rest? And Iran would not sit. It won't happen. Not under this president, who still has 3 years left. So that isn't going to happen. So does Iran come to the table on that? If they do, and it's in an appeasement to the U.S. that everybody can accept there's a runway off this, but then you're overpriced in oil. And I say that because instantly, if I'm Iran, I want my oil, the sanctions removed on it. Probably over time that happens. Is the gold market overpriced because of that? Because there's certainly a safe haven for that built in. Don't know. We'd have to find out. It's not all inflation, so you got to pay attention to that. In the interest rate sector, I don't care if it's Kevin Warsh or whoever it is, the market's bigger than the Fed. And the market is still adding yield all the way through here. And why? Because the economy is not showing the weakness that we've been told. Now, we're going to get a lot of U.S. jobs numbers coming up. We've got to pay attention to them. And it starts tomorrow. You're going to get your Challenger Gray monthly corporate job cuts. Are they going to be large or small? Jobless claims. They've been a surprise each week. They're not coming in that week. Now we get the monthly JOLTS report for December. More jobs offered, less jobs offered. What about the turnover? And then, of course, we're going to see the energy for the natural gas with this terrible weather that has hit the United States, a big section of it, and what the demand is. The estimate is it's going to be a record period of draw, 375 billion cubic feet, versus in January of 2018, taking out 359. We're going to also see Atlanta Fed President Bostic tomorrow speak in Atlanta at the University School of Business. So we'll see what goes on and how this all takes off from there. So those are the things I'm watching. When you and I look at the S&P, we can see how the market's backing off a little bit here. Okay, I don't mind that. Do you mind that? It doesn't look too bad to me. When we take a look on a daily bar chart, you do see the congestion that's built in the market, and you're getting this flip-flop like this. If you think you can catch a trade with it, great. Most people can't, and most people get hurt. You've got to be very nimble sitting in front of a screen and have a very short period to catch these swings up and downs. Understand that. If you're a trend trader, this is not where you belong right now. The market is caught, in my opinion at least, between the 100-day average and the 18. It hasn't been able to break out one way or the other. And it's been sitting in the Bollinger Bands, but it has been testing, which has been the surprise, the downside Bollinger Band, where if you go into charts from 2025, it was testing the upside, not the downside. So there's been a switch in the whole marketplace that you have to recognize. But is that a trend? I don't see it. And momentum's even dropped back into a neutral zone. We then look at the NASDAQ. It's more of a downtrend than an uptrend. Pattern of lower highs, lower lows. But as I teach you here, staying under a Bollinger Band can happen, but it's only 5% of the time. So markets try to get back into it, and when they do, if it's in a downtrend, they get hit again. And that's just what I see happening here. The Dow is a bit different. It's got a higher high and a lower low, and it's almost stuck at the 18-day average of closes. You take a look at it from right here in the middle of January and where you're at now at February 4th. It's almost every day that you hit that 18-day average. You're really not going anywhere. It's a trader's market, not a trending market right now. And the same thing in the Russell. It came down, not up, fell back into the Bollinger Bands, and it's trying to establish a trend. It doesn't have it yet. It's got lower highs but higher lows for the moment. That's not a trend as I see it. We then take a look at the DAX, and it rolled over to a degree, but it's got to take over this. You've got higher lows but lower highs. It's got to break through that number right here, and if it can break through that, then you open the door up for the 4570 level. In the 10-year Treasuries, what do we have? We have a market that continues to stay under the 18-day average, which keeps downside bias in an oversold condition. I view any readings in the slow stochastics with my formula, which is modified from the formula you're probably using, but my subscribers get my formula. They can change how it works. And it is not from the typical face that you see. You got to go into the program to do it. And it's oversold. I don't think you're attracting new short money, while the 2-year note is attracting buy money as it's trying to stay over the 18-day average, not under it. So I still think the 2-10 spread, where traders are buying the 2, selling the 10, is at work. Then we look at the dollar index. I fear that if this market starts taking out tomorrow 97.15, we start the rollover to the downside. I see resistance on the upside at these 3 key averages. In green, the 200, in gray, the 200, in green, the 100, and the 18-day average right here. These are all the values for them, but it's in the 97.90 level that there's a lot of resistance that comes into the market if it can rally. And by the way, the dollar could get a bid if we hear that there's no peace. Trump gets aggravated, no talk for peace, and then the market says, uh-oh, what do I want to own going into whatever Trump's going to do? And it's probably the dollar at that point, and the dollar is vulnerable if a talk takes place. That's at least my reading on it. I could be very wrong on that, but that's my take. Lower highs, lower lows in the euro. So flip-flop it. I'm looking for the support down here in the euro. And if the market can take out 118.60.5 and close over that, it's going to look friendly to me. I'll suddenly be on the bull camp. In the Japanese yen, no difference from my thought process. Thought you'd peak out there. Market's coming down. Why do you even want to get involved until we know how the snap elections go now in 4 days? Okay, because February 8th is the snap election. In Bitcoin, you're looking at a melt-off. That's what this is. So you have a market that's down to 73,000. It was just up to 126,000. It keeps staying down. It's running the lower Bollinger Band. It's trying to get back into it with an embedded reading. Folks, this is just feeding on itself. And the question is, what's going to make it go up? Who's going to step in to do some heavy buying? I don't see it. I don't know where the number is it wants to go. But it's when it's over, it's over. From my perspective, I don't see any reason to be a buyer. In the Brent, higher lows, higher highs, you know what you're playing. You're playing the situation right there in the backyard of Brent crude oil. Does anything happen in the Strait of Hormuz? That's really what you're looking at. When you look at the light sweet crude, overbought in an uptrend. Don't think these are in downtrends. They're in uptrends. You have to get all the way back under 61.12 in order to break the uptrend under this pattern. In the unleaded gas, this is what this is. This isn't gasoline. This is the heating oil. Looking at it, higher highs, higher lows. But we know that the cold weather that we've had in the whole country, the center, down south, is dissipating. We're going to be in the 40s and 50s soon. So the demand for the energy is going to slip a little bit. Markets do that. And if you looked at the heating oil and the natural gas, you had the picture. Look at how this natural gas fell apart. So if you take out this next break low of, let's call that 315, there's a real problem in the market then. It could open the door up to go all the way back into the 250 level before it's over. At least that's what I'm seeing in the market. So you look at it, try to come up with game plans, and that's the initial thing. And you don't have to be in the market every day. You don't have to trade. Sometimes I'll go a week or two, nothing to do. Other times I'll trade and I'm wrong. Okay, being wrong is part of being in the commodity game. The question is, can you control the risk to let the winners take care of themselves? And that's the game. Remember, you can move your cursor up here. That'll take you to our website where you can go see my research. You can click over here or go to iraepstein.com. I'm Ira. Hope you watch the other videos tonight. I'll see you in the morning, video in the morning. Have a great evening.